Mess with fire, now it's close. closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Take my hand, I'll take you higher than you've ever been. You've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So with that daily candle close beneath the 0.5 of the pitch fan to the upside mean reversion path, we are below the equilibrium of this bullish reversion path on this impulse to the upside here. Are we going to see a bounce and reclamation into the FOMC and see this hold with some potential good news of rates being staved off and continue higher to the 32K region? Or are we going to get a rate hike causing this to crash in a Bart Simpson down to the sub 24K region? Let's go look into the liquidity to find out what's going on. What is high block capital? Well, people lock their liquidity in the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters lie in wait or get burnt to a crisp And so let's do that now. Thank you for coming on in. Booyah. So, as it stands right now, we had a little bit of a bounce to reclaim some of the short liquidity. We have yet to come to that 148 million that was pinged in just after the live the other day. And so are we going to make it up to that 29,400 region and see this 500 million 50x pool reclaimed at 29,522? I would like to see it. It looks like, as it stands right now, with our current price tag, that we could be coming up into that region, as it is the thicker band in the nearby vicinity. If you look at what is beneath, we do have some stacked liquidity down at 28,534, which a lot of people are hoping for as well. Are we going to retrace into some of these 100x longs that opened up into resistance here? Looks like we are starting to pull back slightly sub 200, coming down to the 197 region. Are we going to take out some of these 100xers of the longs that they're paying too much on? Go back for that refuel into a bullish order block. Funny that the bullish order block is actually a refuel of knocking off these guys and disguising the bigger players, spot players' positions, if they are going to make that rise up. So I'm confident that we will come up to the 29,522 with this displacement and this change of character shift, that we are possibly coming up into this region. We're just stalling out to stop out some of these 100xers from coming along for the ride, for cutting the queue. We are currently imbalanced by $4.77 billion in short liquidity. That could suggest on the 1 minute time frame that we do make that retracement to that vector candle, as that drop was quite sudden. Let's expand our vision to the higher time frame as we look at the 7-day. Booyah. 7-day time frame does suggest that we do go lower. We do have some longs pinged in here on the 7-day time frame, showing a good 10 billion down below at the 28,650 region. If you go solely off of the 7-day time frame alone, this is hotter than what is above currently. So the insinuation to continue lower does exist on the 7-day time frame. If you expand your vision to the monthly, you do see that there is still 8 billion down at 28.7. Not double digits anymore. They cleared that 40 billion we were looking to clear over the last few days. So they did come and stop out all those longs over the last 30 days. So are they going to make that retrace into the higher pools? It all depends on the FOMC meeting tomorrow. As it stands currently, we are imbalanced slightly to the downside, still on the monthly time frame. If we start to expand our vision to the 3-month as well, the idea of a Bart Simpson and coming down to that sub 24k region could exist, although I'm pretty confident that these are market maker positions with a higher idea in mind, which is why they were left unscathed down here before they shifted out after the Silicon Valley Bank. Or this was after the Silicon Valley Bank. This was the 24k region, but they leave some on the table. If we go to expand our vision on the 6-month, we also have that imbalance to the downside. $142 billion down in 24.6, 180 at 24.3, and 114 at 24 even. So if we do get this drop beneath these vector candles, it is coming down with a fury to these pools. They are next on the chopping block if that is the case. If we do see higher highs, then we are slated to see that path as well, as you do see pools in the 100 billions up into the 33.3 region, 112 billion at 32.1, 71 billion 32.4, 112 billion 32.7, 106 billion 33 even, and 122 billion 33.3, and nearing $100 billion at 33.6 on the 6-month time frame. So the narrative structure to go higher is paved with liquidity if they so choose to take it to the upside on the 6-month time frame. This also is evident on the 2-year time frame, as you start to see the 2-year time frame pools. 175 billion up in the 32.4, 181 at 32.8, 197 billion at 33.2. And you get that 241 billion down at 24.4 if they come down to this region. The next region at 28.8, $66 billion to come take on the 2-year time frame. If that spawns the divergence, it starts to taper at 28.4 and 28 even. So I don't see us necessarily going beneath 28.8 if we are slated, unless we are slated to come all the way down to the bottom of the channel in the Bart Simpson fashion. Which is why I'm still chilling in a slight experimental long play on that idea of bouncing out of here to a certain region to retrace into that vector and see where it goes with the runner. So let's see how that works out as we shift our perspective into the Binance chart and the bearish trend-based fib levels being hit on the 1 level of this impulse retrace to the downside with the 236 entry model on the daily time frame. Gave you a straight daily candle to that region, so we could see a retrace on that if we turn on our indicators. Let's go ahead and do that now. What is this indicator suite? Well, this is momentummaster.info, link in the description for more. You can scroll down the features, toggle everything in the suite to see what it looks like at Bitcoin's bottom before we knew it was a bottom, and read about each component as they come into prominence. So let's take a look at what's coming into prominence now. On the 4-hour time frame, we did get a 4 time frames oversold, mainly higher time frame with this X and this diamond. The X and the diamond does give you that idea. If we go to the quick guide here, you have the circles for lower time frames, diamond for medium time frames, and X's for nearly all time frames, and of course your rare nukes and rockets, which do play out as well. So having the X and the diamond means nearly all the time frames were oversold, 4 in total with the number here, and it closed a higher time frame in that manner, which was likely to come up. We were holding the baselines as well, even though we have this cross down event on the 4-hour time frame. We also have that occurring on the 6. So this is the also potential suppression of this not taking off. On the 6-hour time frame, we are starting to reclaim the bottom baseline as a sign of reversal, but the suppression of the baseline on the 6-hour is still happening as we speak. If we look at the 12-hour as well, 12-hour cross down has occurred back here yesterday, so that the baselines are still tight together. So this could be one of these little meanders around, but they are something to take note of nonetheless. And this is why you could be seeing this suppression, sell-off, and rejection of these bearish trend-based fib levels. Maybe shorters are entering with the higher narrative in mind to come down to these Hail Mary regions at 28,120 and below. Let's go ahead and look at the daily time frame and start to see where the oscillators stand. Shout out to everyone here. What's up, 𝗥𝗲𝗶𝗁? So we've been seeing since July 2nd this daily this daily baseline cross down suppression inbound, and we've seen a bearish retest rejection off of the cloud here, and the cloud is starting to taper on the daily time frame, suggesting that the bullish trend could be over in terms of a retrace idea on this. In similar fashion, we did meander back up over a few days and try to reclaim the cloud, and eventually sputtered out and bearishly retested as well on the daily time frame here in April. So is this a repeat of April? Even still, went with the bearish retests, you do manage to have some percentage plays to the upside to stop out the shorts in the vectors. So that's what we are counting on in this case scenario here. If we look at the stochastic RSI, we are also oversold in a way here, with the Williams coming down to a certain region which hasn't been hit since times where we see a certain bounce idea. Everything is kind of holding in a consolidation range for tomorrow, most likely. As we expand to the, lower ourselves to the 22-hour time frame, we're getting that cross down event on the 22. We are potentially seeing the rising sun with little to no expression of that golden light, but you are seeing this oversold idea with the fertile crescent of in between the mountains here on the 22-hour on the Williams. So you're getting these oscillators in a sweet spot on the 22. If we look at the 12-hour time frame, the 12-hour time frame also oversold now with that large drop to the downside, that liquidity grab. So one of the criteria I like to take before entering is a liquidity grab. Once you have that liquidity grab, then the chance of going the opposite way to grab the liquidity on the other side goes up more significantly. In this consolidation, there is no real guarantee. So everyone's starting to get bearish and wishing for lower prices. That's kind of the signal for me to go long, similar to here when people were really bearish. I was getting rocket ships for this to go to the upside, and similar here when Silicon Valley Bank was getting really bearish and everyone was calling for a retrace down to like 15K and stuff. That's when we shot up. So we can look at what the fear and greed index is saying. We're at neutral right now. It should be a little bit lower than that by now. If we look at the 12-hour time frame, stochastic RSI, money flow, and RSI is oversold now too. If we look at the 6-hour time frame has 3 hours to close. Also oversold, starting to make its way up slowly but surely. The Williams also in a position here to possibly come up. Money flow also beneath the RSI, suggesting you get an insertion of money flow on the 6-hour time frame. Beware of that cross down event on this, as it has yet to reclaim the baselines, but it's doing its damnedest to reclaim the thin boy baseline first and then make its way out here slowly but surely. If we go to the 4-hour time frame, already started to do that with that ice cream scoop like action of the price action, which we like to see, the baseline scooping beneath the price and then coming up to cross up with that DNA helix, negating this cross down event. In similar fashion, we can go back in time and back test this, as we have done for over a year and a half for this indicator, and you can see that that occurs, and then you have candles close above the baselines, and boom, it starts to shoot you up from there. And it starts on the lower time frame, so even if we go back to this point in time, if you back test this for yourself, you can see that if we go to lower time frames like the hourly, you'll see that that cross up event and the baselines holding the price holding above the baseline starts to give you that insinuation of upside with that rising sun event on the Williams with bullish divergence on the money flow, and this had you come up from here, and then we basically kissed off the cloud on the hourly and we were gone from that point. So are we going to this point here and going to see some sort of stop hunt play during the FOMC, some volatility? It could be. FOMC is always a interesting event to see. I will be setting my stops into profit if we do come into this consolidation region, and considering paying myself either way. So are we going to position ourselves up into the liquidity of the midway range of this candle and pause for a potential of dropping down or going up? Let's go ahead and take a look. You have the cross-up event on the hourly. The cloud is mighty thick here, which we're seeing a rejection off the super trend on the hourly time frame. This hourly vector pink stopping volume as of this moment in time. As the volume increases, this could turn into a red vector candle. As it stands right now, let's see what they're coming back into on the liquidity. Shout out to everyone. Thanks for stopping on in. So it looks like they're coming back into these 100x players that are trying to cut the queue and get paid a little bit too much. So they have a stack of 41 plus 26. You got 66 plus 17, $83 million, which they're about to liquidate right now. Let's zoom in and catch them liquidating. They just wicked into that, so they got this 26 million, 41 million, 15 million right here. Are they going to come get the 17 million and wick off their liquidity? And that could be $100 million right there that they just repossess and say thank you for playing.
Fatality.
And that's what happens. Thank you for playing. 100xers, please try again with less leverage and more margin. And that's how they come to those guys that open up into resistance like that. So, and as it stands, there's still some shorts opened up here, 100xers. So once they take out some of these 100xers and have their fill, they could just continue, rise, retrace, continuation to that $500 million character. We're not eyes on the prize, not finished just yet per se. So there are pinging in shorts as well. If you look up above here, we can see which ones are they pinging in. 46 million here in shorts, 26 million, 25 million. So the same as above, so below. They are getting some shorts pinging in up above after they clear these 100x characters. Recently they've been doing a lot of this type of price action. We'll go back and show you in the charts where they kind of go up. This was an interesting moment where they would go up and down and then bring it up and then down and then bring it up and bring it down. They were just straight up wick whacking in this consolidation range. So even if they bring it down, that doesn't mean it's going down, 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 down. That could just be going down to knock out like a rodeo, knocking off the 100xers to knock off the 100xers. There's a lot of 100xers these days, so trying to knock those guys off, which is why we have the stability of the baselines. As long as the baselines hold, even this thin one in the next 8 minutes and 35 seconds, if it closes there with the pink vector, that could be a stopping volume candle. Although you do have this bearish super trend that is still holding, and you had that wick off the cloud. The cloud is mighty thick. Normally you see that thickness dissipate and then you have a stab above it. It would have been more bullish had we taken out the cloud completely with that amount. Like it would have been more bullish to take this out like so, to come up above the cloud, come back and retest it and continue at this point. And then if it gets thin at that point, that would have been your better play to see in terms of a clear conviction of a solid long play. As it stands right now, they're nearly giving everything back in that 1 hour's time frame. Looking at the 15-minute, so you're getting these 5 time frames oversold, 5 time frames oversold. You're getting 3 time frames oversold and not really going anywhere. So this consolidation into the FOMC is real. Are we going to see a retrace into that 29.516? We have it marked off in this vector candle. Also happens to coincide with the confluence of the bearish trend base 6.65 level. 15-minute is starting to taper mid-journey here. We are reaching the end of the silver bullet time. Let's go ahead and take a look at the DXY. DXY is dropping after hitting this reclaimed range level. What is this green dotted line on my chart? Well, It is a gap on the daily time frame that we have reclaimed on the dollar. So with that reclamation of the gap, they could be coming down a little bit to retrace on the daily time frame, creating a little bit of a retrace down into these levels if we see some bullishness, and that would be a idea here. If we take a look at the 12-hour time frame, currently had that baseline cross-up event on the 12-hour, and we saw that steady upside. We were putting out the double bottom idea for the dollar to you, which is why we were looking for those retraces to the 29-2 inverse relationship of the dollar and Bitcoin for that and all. So if this starts to come down a little bit off of this level of the bearish trend-based fib of the 786 resistance slash reclamation of that gap on the daily time frame, we could be seeing a reclamation down to this region. Let's see if the stochastics do insinuate that. We are overbought on the stochastic on the 12-hour. The momentum on the Williams on the 12-hour is still pretty strong, with the leading MACD starting to reach into the stochastic domain. If we go to the 6-hour time frame on the DXY, also tapering off here in a manner. You're getting bearish divergence on the RSI here, so you're getting a higher high on the RSI and a lower high on the price action. So this could be a retrace idea on the 6-hour time frame. We are reclaiming the adaptive, but we're starting to get a cross down event potential with the baselines above the price on the 6-hour time frame, suggesting that you could come back and reset some of these oscillators. The Williams is getting overbought on the DXY, suggesting you could come back down to taper into Wednesday, coming back down here and consolidating and retracing, creating your cup and handle, whatever you want to call it, in a pattern trading, like your rise, retrace, continuation idea if it does continue. So this would be your rise, 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 and now you're starting to see that fatigue on the baselines with the price line here, price action beneath the baseline, and potential cross down of the helix. And this drop of the dollar should bring Bitcoin's value up ever so slightly, inversely relating itself, although the buyers aren't stepping up just yet. It would be better to wait until tomorrow after the volatility kicks in to see the confirmation of the move, where it would kick up and then continue, and then you get that retrace continuation idea. Okay, on the 4-hour time frame, you're seeing less volatility, less momentum rather, but you're seeing the slight kind of growth from that sub 28. It went all the way down to 28.8 region and kind of growing back to a range here. What's up, CNC? How you doing? We're retracing back into some of these 100x longs at the moment. Is it going to become a full engulfing candle? That's what we're waiting to see. Looks like it's kind of retracing back to the neckline here. If you look at this on a lower time frame, it's a very messy retrace, but we are coming back to kiss the cloud, which is kind of thick here. So if we close out on this cloud, this just could be a solid confirmation of a trend shift of the cloud we were talking about yesterday. We obviously don't know the future of how this cloud's going to be. We put out the idea of what you see over and over again, which is a you break out of the cloud, you kiss it, and then you continue, and you look for that thinning of the cloud idea with a stochastic reset of these 4 and 5s of the stochastic array. What are the stochastic array here on Momentum Master? It's a never before seen formula which takes 7 time frames of information, including 32 different indicator values. So seeing this cloud reset here and the thinning of the cloud in this reset here could have given you a little bit of a scalperoo here into Tuesday with London, and even still here with the 5 time frames. So I'm here to see it go to that liquidity pool personally, so we'll see if that occurs. If not, if it breaks the 29K, I will tuck my tail between the legs and take it as an L. So if we go to that thick cloud on the hourly, one more minute for this hourly candle close. We had previous bearish divergence on the money flow, hidden bearish, which did reset in the hours leading up, and then the money flow came beneath the RSI and we started to see it come back in. This is where the back testing of this disparity of the money flow above the RSI for fatigue and beneath the RSI for subtle insertion could occur. When you see the money flow beneath the RSI, this is why we overlay them in the manner we do. And you're possibly getting this 50 reclamation level of this Williams as well. You had the double bottom come up to the 50 level, and you're starting to possibly surge if it confirms as strength here. 25 seconds. We are holding the baseline on the hourly. And the kiss of the cloud on the 15. Are getting that potential cross down on the 15 minute. It is confirmed. You are getting 5 time frames oversold yet again. Historically speaking, when you see these 5s and 6s, it's generally a interesting point. Sometimes they do go a little bit lower for a liquidity grab, but for the most part, for a swing idea, these do kind of play out more often than not. If you look at the schematic on the website, you do see these 4s and 3s, and this is a literal trace over of price action. And then you had the 5s and the 6s and the rocket ships, and that was literally Bitcoin's bottom. The rocket ship was because it was a market swing reversal, not just a daily time frame reversal or something like that. But yeah, when you see these levels, it's generally an interesting idea to see that shift. All right, so let's see what's going on. Ambiguousness on the 15, not going to go down to that level. All right, so let's take a look at the total 2. Total looking very similar to BTC. You have this bearish trend-based fib level that we have broken. The 236 came down to the 706 region and attempting to bounce out of that region. The bullish level up at the 236 here at the 1.156 trillion. So until you can get up above that 1.156 trillion, you are in these bearish regions to come down in total market cap down to these regions, just to note. So until you can reclaim this line here of the range that we dropped out of, this is just possibly a C wave, a B consolidation into a C drop to the 1 level down here for the total market cap. If we look at the total 3, total 3 is starting to see this. This is all the altcoins, by the way. You're in the golden pocket trying to meander. You're not really seeing much of a bounce off the 618 of this impulse. So this is not necessarily a bullish idea here. So we'll leave that up for just a moment, but we're going to put out the bearish trend-based fib level for this drop to the downside here and retrace here. 236 entry model here, boom, drop to the 706 level, and we've been consolidating off of that. If we take this Fibonacci off real quick, you can see the trend-based levels also doing the same thing for total here, meandering off, wanting to get that permission of the trap door at the 706 to come down to the 1 level. This would suggest the C wave coming down to this 1 level if we were also going to continue to dump as per FOMC rate hikes being reintroduced. So you could use the fib retrace golden pocket idea, or you could look at the bearish trend-based fib levels and the bullish one just up above that at 357 billion. So until we can get back above 357 billion, coming up into these regions and above is outlandish to think on total market cap, total 3. Very similar, as you see in the Bitcoin dominance. Bitcoin dominance creating a possible shoulder, head, and shoulder out to come a little bit out of here on the hourly time frame. If we zoom out to another time frame here, we did have 6 time frames oversold to 6 time frames overbought, and it looks like we are trying our damnedest to reclaim this cloud on the 6-hour time frame. Getting a cross down event beneath the cloud could be a bearish retest to come down further, not showing the strength for the dominance of Bitcoin to go up just yet. That's also likely to the news play coming inbound. Had the news play not been in the books, we would have probably come up naturally by now. 12-hour time frame also showing the baseline cross-ups for that Bitcoin dominance play to the upside on the 12-hour time frame. You did get overbought, but you're starting to see that possible double top with the Williams push on this stochastic on the momentum here. This also wants to reclaim some of this vector candle. If you just take the and then switch it to equilibrium, coming to that 50% level, coming up to here at least for Bitcoin dominance. If we go to the USDT dominance, we're already getting some push up as per our projection, which means people are getting knocked out into USDT. This is from a couple days ago we were seeing this. Shout out to CNC for his diligence in wanting to ask me to go over this. It's important, so I do agree to put this into rotation is a good thing. So coming up to this level here and possibly getting rejected off of the wick of the fair value gap in this region and retracing down. How far do you retrace? I don't know, but if we put a let's just assume that it's equilibrium, but even just on the latest surge up, coming down into that region at some point. So knocking more people into USDT, or more people entering out of their into USDT, out of USDT. So if they go out of USDT, then they would basically be entering into entering out of USDT on the down path would be entering into trades. Moving up in dominance would mean they're getting kicked out into USDT. So as it stands right now, the 12-hour is extremely overbought, but you have momentum and the baseline's not showing fatigue just yet, so it could continue higher. If you look at the 6-hour, 6-hour showing some fatigue in similar fashion to the dollar, but not yet failing both the baselines, and you still have that thick cloud kiss twice that we've been seeing this kick out into USDT twice now. So are we going to get this retrace into this impulse for a confirmation continuation idea similar to what we did here and again here? Even if you take this on this level here for up to that level, Most likely this was a equilibrium bounce. Here was the equilibrium, but yeah, you didn't even come up. Okay, from that impulse there, you got an equilibrium bounce for the bullishness of kicking people out into the trade. So when it's extremely bullish, you get a 50% level bounce, not just a 618. So if it's extremely interested in knocking people out into USDT, it would come down to this level and bounce off that. Otherwise, you could get a 618 reaction from there, and then that would be your continuation idea. On the 6-hour time frame, still strong though. Could get that push on the 12-hour to continue higher up into that region to reclaim that vector completely, the fair value gap, whatever you want to call it, which would, with the dominance, and that would consider knocking people into USDT. So we're entering some interesting events. FOMC is not the best time to trade always, so please be careful out there. Let's go back to Bitcoin one last time and wrap it up in a nutshell. We could be going sideways into that. We just took out some of the liquidity in preparation to go lower. If they're not going to continue, they don't have even the strength to muster to come up here. There's no bullish installation of an idea just yet. This was just a liquidity grab of the 100x shorts, and then now they're coming back down into some of these longs. I'm still interested in seeing it come up to the 29,522 region personally. I'd like to see it pierce this cloud with the passion and get above it and start to reclaim some levels here. So go up to here and then start to get some sort of steam going into FOMC and have this be starting out tomorrow's daily candle close with a little bit more bullishness of the candle close up above this region. It would make sense to come up above this range and start to install ideas for both parties to conceive fatigue and bullishness and take it both ways from there. So that is my story and I'm sticking to it. We still have the 4-hour time frame to look at. 4-hour time frame is closing in 48 minutes. How does this candle close? Does it close above these baselines, and more importantly above the second baseline, and start to bring this one up to get that cross up event to negate this cross down? And are we going to get above this adaptive on the 4-hour? What is the adaptive moving average? Well, you can look here down to adaptive. It is a sensitive yet stable moving average which factors out noise and displays the accurate place where price will experience resistance or return for support. Think of this as a second line of defense or hurdle to overcome. So this needs to overcome this hurdle of the adaptive, the trend adaptive. And you can see times where it tries to do that, fatigues out and drops. And so it tries to reclaim these on this 4-hour time frame and fails, or tries to get support on it and succeeds. Resistance fail, resistance succeed, breaks the resistance, comes back for support, continuation. And so the adaptive, we're here, we bounced off the adaptive, boom. So this is a back tested idea and value that we use, which is why it's there. Not random, nothing in it is random. So do we come up above this adaptive moving average? We'd like to see a candle close above it for a bullish idea to be installed. Otherwise, this is just going to be possible continuations down into these bearish trend-based levels down in the 28.4 and below regions as a ABC to the downside. So looking for where the 4-hour candle closes in the next 47 minutes and beyond, because it starts to build the narrative thereafter as well. Not really seeing volume step up to the plate on these candles, not impressive since Tuesday. We haven't really seen much since the dropout. The volume has been weak. we are getting a potential cross up of the leading MACD here, starting to curve up this line to bring it to cross over on the 4-hour time frame. So the 4-hour, interesting to speculate on and see what is going on. If we look at the 6-hour here, 6-hour money flow beneath the RSI, also interesting to note with the Williams. So that you have these higher time frames, this diamond X, the higher time frames of the 6, the 4, and the 12, I believe. These are kind of your subtle support. 12 is now poised to take you up as well. So there's the 12-hour start to negate this cross down. It needs to see a candle with some conviction up to that region for me to be interested. If it doesn't go sideways leading into the FOMC, I might just close it and reassess. I need to see some conviction before that for me to remain in the trade up until that the FOMC. I'm not going to leave a trade open into that without being in profit, at least going in. All right, so daily time frame also in that sweet spot. Money flow beneath the RSI here. Stochastic oversold. So the daily time frame is fatigued. 22-hour time frame is fatigued. 12-hour, 6-hour, 4-hour is fatigued. You got 4 time frames fatigued. So it's what the lower time frames bring to the table now. Can you get this double top above the cloud on the hourly time frame? That is the question. We're here to see it. We will not remain. This is what you're looking for. If you have the sweep, do we get above this bearish super trend on the hourly time frame? We wicked off it for 2 hours in a row. Can we break it with conviction and come up to this pool? That is the question. Baselines are still holding. We held the last hour or two above the baselines here with conviction on the first hour. Second hour retraced and still held. Third hour, can we break above this cloud and start to flip the angle of this cloud and start to see what we were wanting to see yesterday with that idea of the thinning and then that continuation idea. It's the same thing over and over again. It's how you build your narrative out of something. That's what this whole thing is about. You get these double bottoms, you get your Adam and your Eve, and you break out, you consolidate and continue. Shoulder, head, and shoulder. This is the fractal-like nature of the universe and the fractal-like nature of price action. This is why we traced this for over 30 hours before we knew it was the bottom. It's what you see, this same schematic over and over and over again, which is why this is on the website. And this is what you try to see. You see this sharp drop down. You have drop downs from before, and it's not the first time you drop. It's like 3 drops down, 1, 2, 3, and then you start to build your narrative out. And that's where you stand to get the most gains. So, yeah. I mean, it could keep going lower, but you gotta fire in the hole sometimes, and then when you fire in the hole on a 5 and a 6 on the stochastic array, they do eventually give you some juice, 2%. At least you pay, you win even when you lose, because you pay yourself as you go, always, as a good habit. So you start trimming into profit and setting stops into profit, and if it kicks you out, you win either way. So that's what we're here to watch. So you got about 42 minutes for this candle close. You're getting the 5 time frames oversold, closed on the 4-hour, the hourly time frame, and the 4-hour closed a 4 symbol here. So that's pretty good in my book. I mean, it would have been, even with 5s, you do get fake outs, so beware. But when they play out with some nice moves. And so we're here for it. FOMC is tomorrow. This is why we are most likely pausing. Had we not had the FOMC meeting inbound, this would have already played out by now, most likely. So yeah, that's my story, and I'm sticking to it. I see this liquidity above, and it seems to me like it's a juicy target. So I'm waiting for that juicy target to hit, and they're just playing some games to get some liquidity of the longs off the table and ping in some more shorts, which they did. So they got in some more shorts here. They got 18 million, 25 million, 26, 14, and 46 million here for the taking if they decide to come back up here, and it pays for the journey off of these guys' margin for buying the breakout here. So we go down to go up, and we go up to go down. And that is it. That's my story, and I'm sticking to it. We're waiting to see this piercing of the cloud with conviction, and then I'll trim a little bit, set my stop into profit, and see what the FOMC brings tomorrow. Does anyone have anything they want to take a look at before we bid you adieu? What's up, Milu? Smart Data, yo, yo, yo. Anyone have anything they would like to look at? We do have high block for altcoins, by the way, so take advantage if you want. We can look at anything using high block. It is a $70 a month subscription, so you know, consider hitting that like if you haven't already. Anything while you have me? Doge. Ah, yes, Doge is the Elon tweets about X and then suddenly Doge shoots up. Funny how these things work. So we're going to look at Doge. Let's look at the liquidity for Doge while we do it. Everything has to have liquidity behind it to justify the move. Of course, you do have these FOMO ideas, the metaverse and all that was a big one. I remember when sand and all that comes up. Wow, look at all those that volatility. I mean, it's less value, but you see the 10 million. It's not like the 100 million in Bitcoin. It's less, obviously, because it's an altcoin, but you get to see how these shorts build up and then they just rock the shorts. And so right now you're getting both sides just battling it out, and you have a large pool of shorts still beckoning for that 8-cent region that we could come into. It looks like they're stopping out a lot of the 100x and 50xers as they go. There is a majority of 100xers that get 50x. Sorry, 50x looks to be the max, so they're taking out the 50x every oscillation here. There is a building up of longs. It says there's 142 million in long liquidity just below here. Let's go ahead and take a look at the 6-hour time frame. It looks like we're reaching up for the adaptive moving average on the 6-hour. You had these previously 5 time frames, 6 time frames oversold. Those paid very well. And when you close the 6-hour time frame with those intact, it never got below that point. I don't know why I had these support lines on here. Since when did I put those there? I don't remember. It was when I was using a different color scheme, so it must have been a while ago. Let's go back to the daily and see what that is. Ah, so we had some rocket ships back in August, and we were talking about a measured move idea. That was back when I was working for free for who strung me along for nothing. So yeah, these rocket ships played out for Doge back then, and yeah, that's where we had that support, and it looks like we've been honoring it. So coming back, we have reclaimed the 200 weighted, and we had this cloud kiss reversal idea on the daily time frame. Very interesting. And it looks like we are starting to build a narrative structure to get out of the dumps for Doge. And we got shoulder, head, and possible shoulder breakout here, and we're trying to reclaim certain levels. If you draw these kind of range ideas here, if you don't know where to find fair value gaps, you can use these fractal break imbalance to find them on these different time frames. I've gotten a keen eye without them, so I can just put it there. So coming back into the 8-cent region also lines up with the liquidity up here. The top is 796, so coming up to the 796 region would put you up in the range of here. So clearing all the shorts would put you just above this region on Doge. So I wouldn't consider getting necessarily above the 8-cent region before you start to retrace a little bit. Maybe you get a little bit higher but then start to come back down. If we look at the 12-hour time frame, you're starting to get that potential fatigue on the Williams, but it could come up for some time here. Depends on the bullishness of the news with Elon and how the FOMC treats everything with Bitcoin. As we reach the adaptive levels here on the 6-hour time frame, we could wick off that and find that as resistance. Cloud has been treating us quite well on the 6-hour time frame. 4-hour time frame also, we've been seeing some meandering, but the cross-ups have been in play. We still have strength. I wouldn't be looking to short at all just yet, as we still, there's lots of shorts still resting above here, so they could be making another stab up to that 8-cent region, which would put you, slated for another 4% up. This momentum is pretty strong on this 4-hour baseline. I'm going to remove that because it's getting too big. Cloud is pretty strong on the volume here for the hourly. We saw this kiss off it and it's just rising up. We do have a cross down event, but most likely going to get suppressed here as you see the push up for that alt play. Hourly time frame is resetting in a manner here. The Williams alarm is sounding, and you have this double top idea possibly ensuing. You're getting a little bit of fatigue on the money flow, just a bit, starting to taper though. If you're already in a long, then possibly thinking about one more push. You get 3 hits to the high, so this is your first hit here. Let's do it. First hit was here, second hit was here, and so you'd be looking for that third hit at some stage up in this region maybe. If you start to make higher highs though, then yeah, the 15-minute is looking like it's going to have a little scalper root. With the hourly reset, you're getting a cross-up event here on Doge, so you could be seeing this. You get the baselines up beneath the price here. You could be getting this surge up here, up into this region. Looking at the 5-minute, also getting the cross-up event with the volume coming in. Bullish divergence on the 5-minute money flow and the RSI here. You had these confirmation signals if you were looking at it prior to this, letting me know about it. You had the Williams resetting as well. So it works just the same. It's a little bit more choppy and less smooth because the volume is less smooth and less intense. The indicator gets more accurate with more higher volume assets, so this is less volume, so it's going to be a little bit more choppy, but the concepts remain the same with the baselines beneath the price like this. And yeah, looking to come up to these highs at the bare minimum. If we use our trend-based fib levels here, you could take the impulse from here to the top here and the retrace down here, and this gives you your 236 entry at 7682 and where to look for profit. Boom, right at the 7950. It matches our level pretty accurately. So getting up to the 786 of that and finding a fatigue point here would be the idea for Doge. And you could spike up higher on a Hail Mary, so you move your stops into profit using the fibs, and if it comes down beneath this and knocks you out, then it wasn't meant to be. And that's my story, and I'm sticking to it on Doge. That was quick. So BTC still having a little bit of issues here, trying to retrace into that. But we already gave a thorough update on BTC. I think that's good enough for now. So we're looking for that hourly close in the next 30 minutes to see how that third hour treats us. Are we going to do bearish engulfing and take out all the 100xers now and start to make a narrative down into the sub 29k region, or start to make the shift back up into the liquidity here? Only time will tell, and that's about it. So thank you everyone. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, and all that fun stuff, and we will catch you on the flip side. Peace.